The first and largest mistake is overlooking the benefits of utilizing trading bots like Trojan. Instead of leveraging the speed and efficiency of bots, many individuals opt for slow decentralized exchanges for their transactions. Using DXs is proven to be over 5 times slower than using a trading bot. Failure to use these bots will lead to missed opportunities and slower execution of trades. If you want to use Trojan bot, you can click the link in the description to get started. I also have a video on my channel showing you how to set up. It will be at the end of this video. Another mistake new traders make is buying into coins without locked liquidity. Many newcomers are drawn to coins boasting high liquidity, assuming it's a better quality coin. However, this assumption is simply not true. A coin can have a billion liquidity and get rug pulled, where the value can plummet in an instant. It's extremely risky to trade coins without locked liquidity. If you do, it's the same as going to the casino to gamble. You can tell if a coin has locked liquidity based on if there's a lock on deck screener here, but it takes a minute to update, so I recommend using Rug Checker. This mistake is pretty common, and how most new traders give up because they lose. They all buy into dead coins. Dead coins will almost always have little to no trading volume, as well as the coin going in a downtrend. Despite having appealing narratives or impressive websites, these coins have often lost their momentum and are unlikely to yield profits. Recognizing such scenarios and avoiding investment in bottomed-out coins is pivotal for preserving capital. Another common mistake is failing to do technical analysis before placing a trade. It's extremely important to perform due diligence and evaluate various factors before committing to a trade. This includes assessing the coin's presence on social media platforms, liquidity levels, and trading volume. Relying solely on superficial impressions of a coin's potential can lead to significant losses. I have plenty of guides on how to get great coins in my Discord server. The link is in the description. Finally, the last common error among novice traders is neglecting to zoom out on the chart. It's a crucial step to take a broader view beyond short-term fluctuations. By zooming out, traders can discern long-term trends, such as downtrends, which provide crucial insights for decision-making. This simple yet vital practice is often overlooked but can significantly aid both seasoned and beginner traders alike. Looking at this coin, you can obviously see this coin has been on a downtrend for a long time. If you were only looking at a 5-minute chart, you would see green candles trending upwards and buy. That is why it's essential to zoom out.